Good morning and welcome back to Almus Market Mornings. Optimism about peace talks has been the driving sentiment for risk assets this week. President Trump, of course, has been very active on Twitter, like always, fully expressing himself. But generally, there is a tentative waiting game being played. The status of whether ships are passing via Hormuz is questionable, but for a change, it's not just Hormuz trade that's creating confusion. It's also the RBI's latest directive. Now, after the directive released earlier, which curved arbitrage positions and put restrictions on cancellation and rebooking of forward contracts, of derivative contracts, that is, RBI came up with another directive yesterday, removing restrictions imposed in the April 1st circular. And let's understand what's happening. Good morning, JK. Can you briefly tell us what exactly this directive is? Does this new directive essentially mean things are back to how they were before April 1st circular?
Good morning, Swaraj. So we had directives from RBI not just on April 1st. There was even a directive on April 27th, and that is where the changes have come now. April 27th, they restricted the net open positions of banks to 100 million, counting only the local position, and that restriction continues. And then they also subsequently restricted banks from taking position in the offshore market, which is also now continuing. What is changed now is the restriction that was imposed on 1st April, whereby banks were not allowed to offer the non-deliverable forward coverage or hedging mechanism for clients, which is now once again made available to clients. And also there was a restriction on cancellations being rebooked, which was imposed on 1st April, and that is also been restored. Of course, this will also need to be reconfirmed again, because there might be some interpretational problem. As I read it, it is restored to what it was earlier. However, the wordings are not very clear, and therefore it may just apply to only rollovers, or whether it is applicable for any kind of cancellation which can be rebooked. That is what we need to agree. In any case, this is some sort of a relaxation, but important thing is that the banks' positions are considered still within the 100 million limit, which is not likely to be eased near term, because the continued geopolitical uncertainty, elevated oil prices, and risks to India's current account and deficit and inflation are prompting expectation that they will remain cautious and retain the limits on speculative exposures until these external conditions stabilize. So there is some relaxation, but RBI is still on guard for key things which particularly relate to speculation. That is a key takeaway from yesterday's guidelines. And of course, rupee's reaction to this is not likely to be much. In fact, their directive to oil companies to access their credit lines instead of spot market had only a minimal impact. Yesterday, initially, there was some strength in the rupee that was seen, but subsequently, good buying, genuine import cover, as well as investor buying in dollars was seen, which took the dollar back to around 93.20 levels. And as we also shared, until for some time now, we should be contending with the range of 90 to 50, 93.50. Not only is the geopolitical conditions not settled, but also the capital flows to India continue to be elusive, and that can keep the RBI very much on guard, so as to avoid a fresh pressure on the rupee, even if it is due to the import covers, etc. So there will be some sort of cautious approach by RBI that will be continuing. On the global side, I would say the situation is one of extreme confusion, uncertainty, and so there are various statements and threats and denials that are coming through so often that it is very difficult to see exactly what is happening on the ground. The reality is that the 15-day ceasefire that was agreed between US and Iran expires tomorrow morning India time, or 21st April US time. So that what happens after that, whether there's a extension of the ceasefire or whether the talks resume before that, is something that the market is looking ahead to. Market, particularly the stock markets, are still not very concerned, although there was no much movement yesterday in US market or in other markets as well, waiting for fresh developments. Meantime, what is creating uncertainty is the US seizing one of the ships of Iran, and then Iran continuing to block the Hormuz Strait, contending that Iran, U.S. blockade of ships is not helping the matters. Iran has also said that the continuation of violation of ceasefire by U.S. Is not helping the diplomatic process as well. So there are conflicting reports whether U.S. delegation is reaching Pakistan or not. President Trump said, Vance would be reaching Pakistan along with the delegation for talks, but some reports said Vance is yet to leave for Pakistan. So it's a minute-to-minute update that which is not giving real clarity, but definitely that needs to be followed just to keep ourselves updated. So I think in this situation, it is very justifiable that markets are not having clarity, and therefore they remain in a much tighter range now. So only there are three possibilities now: whether the ceasefire is extended, or the peace talks continue, or Hormuz Strait remains partially open. Of course, the worst case scenario would be the ceasefire collapsing and all the attacks resume. But personally, I am a bit optimistic, at least for some sort of a peace agreement, because there is a lot of pressure on the US side as well. There is an economic pressure because inflation is rising, gasoline prices are at multi-year highs, and then going forward there can be slowdown or even recession in the economy if it continues due to consumption getting affected. There is also the political pressure. The with midterm elections coming and the president's rating at a much lower level now, and there is also the pressure from other GCC countries because they are probably now saying that this war was started by US, and they are look in the position where they have to face a lot of difficulty. UAE, in fact, has actually openly said that they could resort to supplying oil in yuan if these difficulties continue. It's a kind of veiled threat to demean the dollar because dollar has been the main currency of pricing the oil, and that seems to be kind of a slow turn to the other currency. We know that we already there are some bilateral trades that are happening in oil in yuan and ruble, but UAE is saying that is important development that should be followed closely. Now, apart from this, of course, we also have final Senate Banking Committee hearing on confirmation of Kevin Warsh, who is set to replace Jerome Powell, whose term expires in next month. There will be no particular stance that the market is taking, because of this impending confirmation. And of course, what will happen is that April 29, we have the Fed meeting. And if Warsh, confirmation is done before that, probably market will more likely to hear what Warsh has to say rather than what Powell will be saying in that meeting. So that is a change that we will be observing going forward. So markets are now sitting on their hands, waiting for the next developments. Economic data is still not receiving as much attention as it used to because the war is predominant in everyone's minds. Of course, there was also an update from Europe where Lagarde says that the oil and gas prices are not having that much of an impact as they initially thought. And in fact, European natural gas prices are below their baseline, reflecting that, the monetary policy will still be on a wait and watch mode. So that's some sort of a reassurance from the European central bank, as well as Bank of Japan also said that, in a way it said that April may not be the time when they will hike the rate. It could more likely be in June. So monetary policy is also on the watch, and of course, war news will take precedence above everything. Thank you.
Thank you, Jake. And yeah, so I think generally markets are sitting on their hands. They are waiting for more developments. Things on the ground also seem quite confusing because we are having various statements, from various sources. And really, I think it's not very clear as to what is happening in the ground. One thing which JK mentioned, and that's important, is that the 15-day ceasefire, it expires tomorrow. So whether there is an extension or talks resume is something that will be looked at. And when it comes to the domestic markets, of course, the restriction imposed from 1st April, the banks were not allowed to offer offshore derivatives, is now available to clients. Cancellation and rebooking, which was not being permitted, is restored as per earlier. But these are all subject to interpretation. So we will need to wait for a more detailed interpretation because, as far as our understanding goes, even the restrictions that were imposed earlier were being interpreted differently by different banks. So we will need to see how these are sort of interpreted and if there is more clarity that comes. But more important thing to note is that this is some sort of a relaxation. Um, so yeah, otherwise rupee remains in a range. There was not much of a reaction to this particular update, and broadly it should be in the 92 half, 93 half range. That's it from us today. Thanks for listening. We will catch up tomorrow with the fresh round of updates.